Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to talk about market conditions, answer any questions you might have, talk about earnings season. We have unemployment data next Friday. We have elections in 2 weeks. So there are some geopolitical risk, macroeconomic headwinds, earnings. So what to expect going into the elections and after. And any questions you might have. So please type in your question. I would love to answer it. The difference between Tradespoon and maybe some of the other subscriptions that you have or you see out there is that most of them are run by market makers, right? Someone who's been trading on the floor or been part of the hedge funds, and they're traders. And then they share their experience how to trade. We at Tradespoon a little bit different angle. My background is technology. So I worked for hedge funds, broker dealers, but on technology side, building technology models, but obviously had to learn how to trade. And then some of these companies actually went public. I was fortunate enough to have that opportunity in my life. And I decided to manage my own money. And we are heavily invested into technology. So we have a team of financial engineers that are building models and using latest innovation in AI and modeling, are building new models, using new models to train on the data, train on our algorithms, and make inferences, right? Make signals. And then I trade these signals in live trading. Disclosures are very important. I'm going to go through specific trade ideas, so disclosures are very important. Options involves risk, not suitable for everyone. And if this is the first time you see this disclosure, I encourage you to visit optionsclearing.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right. Let's take a look at the market first. All right, so I'm looking at, let's remove Yellow Tunnel. Let's look at the first spiders. So as we are, this is what, second week of earnings. Spiders is up 1%. It's approaching all-time high on better than expected earnings from Capital One Financial today, from Tesla yesterday. Right, we have moves from WDC, moves to the upside, Capital One Financial, move to the upside. Give me a second. Capital One Financial. Let's see. So WDC up 10% after the earnings. Let's see. We have LVS. LVS is up. After I have these positions, so I need to close them. Let's see. 0.60. Let's look at LVS. And then Capital One Financial is 166.50. Let's see. So it looks like rally continues. 68, pull to 166. Okay. After the earnings, so you have Capital One Financial move up to 10%, 2 standard deviation. You have WDC move 10%. Tesla had a strong earnings this week, continues to grind higher. What else? Netflix after the earnings, also strong move to the upside. So kind of a pretty decent earnings so far. In terms of interest rates, right? In terms of interest rates, 10-year yield is overbought, right? It has been overbought since, probably, well, it was oversold since August. Now it's overbought, and probably will pull back. Looks like it started to build in the bottom. If it does pull back, that gives a lot of momentum to the bulls, to the market. But we still have elections in 2 weeks. And we have unemployment data next Friday, which is also something to keep an eye on. Dollar highly correlated to interest rates, kind of following the interest rates alone. What else? High yield did pull back. It's staying below 50-day moving average. That's a little bit area of concern, right? Area of concern, that is, if high yield is below 50-day moving average and the spread widens between the high yield and treasury, that's usually a sign of concern. VIX is back to 18, so that's bullish. We had an 18 print. We were above 20, and VIX has been elevated going into the elections. People are concerned. Semiconductors bouncing back, have been underperforming. Spiders are at all-time high, trying to break out. Small caps rebounding 50-day moving average. It did drop this week. Again, concern. All the interest-sensitive sectors dropped this week on the concern that Fed is not going to aggressively cut interest rates. So the interest rates went up, and then you see a big drop in, not big, but you had a drop in small caps, but 50-day moving average has been a strong support for small banks. And similar regional banks, kind of in a similar boat. Banks are in a similar boat. Silver has been one of the stronger performing asset classes. It finally broke out of this 10-year, 15-year highs and confirmed the breakout. So that's pretty well covered trade. I'm bullish silver as well. Technology is up today. What else? Bitcoin, proxy for risk taking, also broke through this downtrend. It's staying at 2024. August 2024 high, and then next level is all-time high, which is March, around 72,000. So Bitcoin continues to grind high. Crude oil is still higher lows, lower highs, right? It's kind of a wedge, it's trading in this wedge. So it definitely needs to break through this trend first. But for now, it's been, I would say, neutral, right? At some point, it's going to break either to the downside or to the upside. But for now, there are geopolitical risks. There's supply from the OPEC, and then, state of global economy. So for now, it's kind of not looking for direction in crude oil. Any questions on the state of the economy? Macroeconomic. So let's recap weekly results for some of these patterns. Materials, if you own materials, it did pull back, right? We had a down week in materials, but still, confirmed breakout, multi-year high or all-time high, and strong price pattern. Home builders, similar situation. It did break through 120. We did have some earnings from some of the banks, home builders. This is again interest sensitive sector, and one of the reasons it pulled back because now expectation that maybe Fed a little bit ahead of itself by cutting interest rates 50 basis points. So there's still some uncertainty. I mean, it did break 120, 118. You know, I mean, it depends next week. If we have a follow through and a continuation of drop, then and interest rates continue to go higher, that will be bearish. But if interest rates are overbought and they pull back, then home builders should stabilize. China this week is neutral, right? It's kind of a flat formation consolidating after a strong move to the upside, and then disappointment on the size of the stimulus package. Industrials had a bad week, right? General Electric, Triple M, Honeywell, they did not do well in the earnings. The bar is set high, right? You have this vertical moves in GE, it pulled back, vertical moves in Triple M, it pulled back, vertical moves in Honeywell, it pulled back. So not a good week for industrials. With the earnings, banks did well. We talked about banks. Energy kind of mixed bag. And tomorrow, next week, going to be Magnificent Seven, right? Netflix so far had a strong earnings out of the Magnificent Seven. Tesla had strong earnings out of the Magnificent. They're back to being magnificent again. Tesla, well, Tesla maybe not yet, but it's getting there. And then next week we have Apple, Meta, Amazon, and Google. NVIDIA is going to be at the end. So energy, I mean, kind of neutral, right? Consolidating, not going anywhere. Silver we talked about. Utilities has been a strong sector, also consolidating, has a kind of neutral reaction. Banks breaking out. I mean, strong move. It looks like it broke out after the earnings, and I think banks can continue going higher. What else? That's about it. All right. So, any questions so far? BJ, Peter, Steven, Vitus, Xiaoming. Welcome, Xiaoming. Let me know if you have any questions. So at Tradespoon, we have models. So for now, let's look at spiders. Actually, model turning, it has been bearish, but now it's turning neutral. Maybe even going to turn bullish if we're going to make all-time high. But we've been through overbought conditions. We need time to kind of digest the overbought conditions. Model actually sees that we're turning neutral. So I think, going into elections and after, we could have a breakout above 585, right? All-time high. And actually model sees that by the end of the year, we could be at 600 or even 610, right? So I would not, by end of the year, I would not be surprised if we're seeing 600 or 610. Obviously, if we do have some negative surprise, right, geopolitical risk or maybe runaway elections, escalation in the Middle East, then on the downside, 560 is very important support. Also well positioned. We talked about positioning in the live trading room today. So if you look at how people are positioning going into the end of the year, let's leave 11:15, 12:20. So into the end of the year, in terms of expectations and positioning, right, 600 to 610. So one standard deviation on the upside, if we're at 600 and 610, you should not be surprised. If we are at 560, 570, you also should not be surprised if it's if there's a negative surprise. So far, Christmas rally, seasonality, earnings, macroeconomic data all points to 600 or 610 by the end of the year. But obviously 560 is also not off the table. So I would say this is scenario one. We hit 560 first or 610, right? Scenario number two. Very important as a trader or as an investor to have these positive negative rehearsal exercises so you can figure out how to rebalance your portfolio and how much cash you need, right? If you think the first scenario we're going to hit 560 before we hit 610. Well, then you need to raise cash, maybe defend, buy puts, maybe sell call spreads, right? Because you want to defend the 560 position. If not, if you're bullish, then 610, maybe you want to add to some of your positions. Any questions? So how many of you think we're gonna, and EM fell by 20%? Wow, DJ, that's a pretty sharp pullback. Is it earnings? Earnings miss. Yeah, so earnings, again, just because the, oops, no, sorry. What happened here? Why can I erase this? It's weird. Give me a second. I want to highlight force quit. Right, just because the stock is going higher, right, and it has a strong momentum, like I was long Triple M, General Electric has been one of the most popular stock, right, from industrial. That doesn't mean it cannot pull back after the earnings because the bar is set high, right? So we talked about one of my positions is actually Meta, right? Meta is one of my positions. So 535, 540 call spread, I'm bullish on Meta, right? But I don't know what the results of Meta. It could look like, General Electric, or it could look like Tesla, right? Just depends on expectation. Obviously, it's been a strong stock, one of the better performing Magnificent Seven stock, multi-month consolidation breakout. So it just needs, decent earnings. It doesn't need strong earnings. But the expectation is, right, doesn't matter what I think, the question is what does everybody think, or majority of the people think. So this shows you what is majority of option trader thinks going into the earnings, right? Going into the earnings, one standard deviation move is about 7-8%. We're at 620. You have a pretty decent gamma positioning at 620. And if they missed earnings, then it's 535, 540 with not a lot of positioning, right? Everybody's buying calls. You can see 30 million contracts at 600. So somebody bought 30 million contracts of 600, right? Somebody bought 18 million contracts of 620, right? And nobody's buying puts, right? Nobody's buying puts. Probably selling, right? Not gamma short, so probably selling some of these puts. So that opens the door to that we could drop to one standard deviation would be 530, 540, and two standard deviation would be, it could drop 50, so it could drop to 200-day moving average, 500, right? So if it drops to 500, well, then I'm going to lose the spread, right? And the maximum exposure is $3.30. So I'm going to be out $3.30. If the earnings, if we are staying at least above one standard deviation, right? If we stop somewhere here on the negative news, then I should realize majority of the profit because it's a November position. It right away will, if it stays in the money. So that's the decision to make for any earnings that are coming up, right? Whether it's Meta or Apple, Nvidia, these are all popular names. And when you own these positions, if you have a spread, maybe if you have two contracts, maybe you want to close one contract, right? If you have 50 shares or 100 shares of stock, maybe it makes sense to sell calls against it or buy put spread. It's an expensive stock, right? 100 shares is 53,000. Most people don't have. Average account is not 53,000. It's $10,000. So most people do not have 100 shares, and the only way to participate was the spread or a butterfly. But that's the consideration, right? Maybe if you only have long call, maybe it makes sense to sell call against it, right? One way to trade this, Nvidia you can buy just trade shares, right? So I did buy NVIDIA. Actually, yesterday was able to close half of the position today. Was able to capture close to $2. And Tesla, right? These are expensive stocks. So if you cannot buy 100 or 50 shares to trade with, hedge, I mean, you can always buy fraction. You don't need 100 shares. You can buy 10 shares, right? 10 shares of Tesla is still, $2,400. And if you have $10,000, $2,400, that means 50%, 25% of your portfolio is in Tesla, which is pretty high exposure. Or you can do spreads, right? In this case, I was able to participate in the earnings, and I put on the trade for 80 cents and was able to close it for $2.30, right? So triple-digit returns, right? It doesn't happen all the time, right? And in the live trading room, I basically say I believe in the barbell investment approach, right? Barbell. What is this? Right. The idea is that you don't want to, in the low probability trades, right? These are low probability trades, right? Tesla doesn't move 20%, right? I think one standard deviation was 7% and two standard deviation was 15%, and Tesla is up more than 20%, right? So it occurs not frequently, right? I did the same trade with FCX this week. And, I spent 34 cents, and it never got to any of the strikes, right? I had 45.5 put. I had 51 call, and it got close to both extremes, but still staying in, never got to that. So as long as you realize that these are probability, less than 50% probability, right? 10%, 20%, 30%. But the move could be significant, right? Like I did Capital One Financial, 165, so I put on a trade for 60 cents, but at this point I'm up $5, right? So as long as you do these trades consistently, right, more than once, and as long as your reward, right, if you make on one trade $5 and you lose 50 cents on another trade, well, as long as you're more accurate than 1 time out of 10, portfolio will grow, right? If you make $1 on one trade, but on 10 trades you lose $2, well then then your portfolio is not gonna grow. So I would put maybe, depending on your risk tolerance, maybe 5%, maybe 10, maybe 20% of your portfolio into these high risk, low probability trades are very popular. Low probability trades are very popular because it looks great, right? I invested, 80 cents on Tesla, and I made, $2, right? $2.30, right? That looks great, but that's gonna happen maybe best case scenario, 1 out of 3 or 1 out of 4 times. So then it becomes management, right? As long as I, 3 trades, I need to make less than $2, lose less than $2.30, right? Because if I made $2.30 on one trade, but on 3 trades I lost $2.30, well then best case scenario, I just broke even. So that's something to keep in mind. So this was a Tesla trade. So let's just look. So on Tradespoon, you can basically sign up for elite orders, right? Elite service subscription, elite trading service, and you can see all of my trades. I try to do mixture. We have some people that only trade stocks, so you have an example of stock trades. You have some people that don't trade options or option spreads, so that's FCX trade, Tesla trades this week. What else did I do this week? That's it, I think, right? Today, sorry, last 7 days. I know I trade more often than that. Wells Fargo, right? Wells Fargo was another, I think, good trade this week. This is an example of directional spread, right? I put on a trade for $2.90, closed it at $3.80. So that's 90 cents profit, 30% profit in 1 week, right? So directional trades, some of it has to do with earnings, some of it has to do with the models, some of it has to do, macro, micro research. So that's elite circle. You have a mixture of both stock and option trades. You can see my orders, you can see my positions real time. You can put your phone number and get SMS message every time I trade. What else? And you can participate in live trading room. So we have morning bell, closing bell. Keith and I, between two of us, probably over 50 years of experience, probably more than I wanted to admit, but a lot of experience doing these trades, managing these trades. So you have exposure, participate live, or you can watch the recording, right? Or you can watch the recording. Andre, BJ, Peter, Steven, Vitus, any questions? We have Robo Investor. This is stock only trades. We have premium portfolio. This is only spreads, like Wells Fargo spread. If you just want to follow my trades, that's Shadow Trader. If you want to watch the models, then we have Active Trader, Weekly Trader, Monthly Trader. This is where I get my ideas, right? So Active Trader, every day we publish signals, right? This is a short-term model, analyzes shorter period of time. Weekly Trader analyzes a little bit more longer, right? The trade meant to hold, if Active Trader is a couple of days, maybe a week, then Weekly Trader is, a week, maybe a couple of weeks, maybe a month. And then Monthly Trader, probably months or a couple quarters, right? So these are different models, analyzes different time interval and fits different type of traders, right? Some people hold position Monday, some people hold position a couple weeks, some people hold position a couple months, some people hold positions for a couple of years. So all of that is taken into consideration. And Active Trader, like especially yesterday, this is where I came up with the NVIDIA signal. There was signal for Morgan Stanley. I didn't trade Morgan Stanley because I have Bank of New York, right? Similar companies, so I don't want to be overly exposed. Railroads, I just didn't take the trade. It's not very liquid. So, okay. But some people might want to trade these signals. All right, so NVIDIA, the idea was that, you have strategy A or strategy B. You can either enter it close to 139.56, right? So that's what I did at 140. And then here we're looking for 1% move, right? So if you bought it at 139.46, you exit at 140.96. I exited at 140, I entered at 140, exited at 142, right? But that's where you can make your own adjustments. Sometimes people ask me questions, Vlad, what if it never reached 139.56, right, yesterday? Well, if it never reached 139.56 and you're still not sure what to do, then I would say you probably don't have a clearly defined trading plan, right? Let's say you did not enter that. So then you don't have a clearly defined trading plan, you're still new to trading, then I would say these signals are meant to be for somebody who has the trading plan, who keeps the journal on daily basis, and they just need signals. And that's probably half of our subscribers, right? They've been trading probably longer than I have been, or a lot, and they just need signals. But if you're not sure, do you wait for this entry point? What if they don't enter? That means you probably don't have a trading plan. You haven't been trading signals like that. Then I would encourage you to participate in the lead circle, because that's why I traded. I talk about this, and then we can make a decision together, right? That would be my idea. But you want to be consistent, right? Usually it's just consistent. You can always wait till this entry point reached. You can look at your own analysis and basically say, Vlad, this looks good. I don't need to wait. 140 is good enough for me, right? It reached that support level. As long as the model says it has a positive momentum, then, I'm in the trade. So that would be an example of Active Trader, signals getting generated every day, right? You can trade stock or you can trade options, right? Today, CME, VTR, KR, right? Completely different sectors that the model identify. And again, you can trade stocks or you can trade options. Options are driven off the levels of stocks, right? So, you could buy the stock at 226.25 based on what the model predicted, or at 220 plus 970, 229.70 level, right? Yesterday's close. And you can trade options, right? If you have weekly options, we'll show weekly options, but if weekly options don't exist, then we'll show monthly, right? An example of KR, there are weekly options. So basically, model says If it's 56.70 considered to buy, and both in this example, they're both considered to be 56.70. Right, so you buy at 56.70, and at 57.25 you exit the position. It actually looks like Mal did a good job on KR today. Yep. All right, these signals are published as of yesterday, so it does see these momentums. So that's active trader signals. 1% target gain. Weekly trader, the idea is to hold it longer, so then it will be 2.5%. Like some of the REITs, VNO. Same thing, right? It basically tells you what the entry point, but now the target gain is 2.5%, right? And stop losses too. And monthly trader is 5%. So you hold these positions longer with wider, target gain stop losses. That means position size has to be reduced, right? If you're doing day trading, your position is probably higher than if you're doing weekly or monthly trading. So those are the models that we have on active trader, weekly trader, and monthly trader. Any questions? We talked about stock forecast toolbox, right? This is one of the main models that I use to analyze any stock for trend, right? Support and resistance, that short term, long term, right? 1 hour. And also for, we do have research, right? Seasonality, right? One of the reasons I'm bullish is because usually, September, October is volatile, but then end of October is where you have Christmas rally starts, right? We have elections. Usually during elections, it's the same thing. Usually there's a pullback toward the elections and then the rally. We really haven't had any pullbacks meaningful, so it's a little bit different this year. So we'll see, but usually, after election, you have that rally. So we do have seasonality. You can analyze seasonality for any stock or options. And then finally is popular tool is probability calculator. Right, it shows you, okay, 560, based on historical, right, you have implied volatility and historical. Based on historical volatility, 590, consider selling, 567, consider buying, right? Another model, third, this is kind of, well, this is using similar idea that Gamma, right? This uses options data, this is uses, implied volatility data, but you see similar support and resistance, right? If I analyze spiders, you kind of see the same information that, if I leave the monthlies, 600 to 610 is your range, and on the bottom 565, right? So, and big position at 595, 590. So that's what people are using to kind of come up with these levels, and those are the levels that bulls and bears will meet and will try to defend. Thank you, BJ. Andre, BJ, Peter, Steven, Vitus. Any other questions? If there are no other questions, that's all I have for today. You guys have been awesome. Thank you very much for participating, and I will see you next week. Thank you. Have a great weekend, everybody. Andre, BJ, Peter, Steven, Vitus, Michael, Steve, Fred, Jeff. Thank you for participating.